Most traders pass an evaluation, they get to the funded stage, and then they blow it within the first 2 weeks of being funded. I've seen it on students, I've seen it in my Discord, and I actually have done it myself when I was an upcoming trader and developing trader, going through these evaluations, finally passing them, and then blowing it. And that's a common thing for many people. In this video, I'm gonna break down what I'm doing in the first day, the first week, the first month to keep that funded account alive and really getting consistently paid. So stay tuned to that video, watch to the end. It's step by step. If you're doing this, you can't really fail, you can't mess it up, and you definitely get paid. Why would you listen to me? I've made multiple six figures in the market with prop firms alone, and I'm trading for the last 6 years with multiple prop firms, made multiple six figures in the market, and I'm gonna tell you in this video how we're gonna approach this properly and getting paid consistently. Here's the thing nobody tells you: if you pass the challenge and you hit that target, you go to the funded stage, that is the moment where you feel like accomplished, achievement. You feel like you have done it now you can make money. And these rising expectations will actually feed into your performance, and mostly negative because you're now expecting to make money. And this is where you're gonna size up, you overtrade on the first day of your funded account. You really want to make things happen, and you're gonna look and stalk setups which might be not there. And that's a trap. The challenge had one job: you're gonna go quickly to the profit target and you're gonna get to the funded stage. The funded stage has a completely different role, and that means that you're gonna need to protect yourself, not chasing that profit target or that payout amount you want really to have in your bank account. It's more about protecting your capital you now earn for yourself. And consistent people, consistent prop trader would always stack up capital and work on simultaneously on challenges where they can test around and go a bit more aggressively, rather than straight away having that funded account, one singular one, and going very aggressive for that payout, where most people mismanage, they raise emotions, and they mishandle their complete capital, which then be getting lost and meaning you're back at evaluation jail, where you need 1, 2, 3, 4, 5 new challenges to get to that funded stage, and that is really harming your business because there's a lot of expenses which you're going through. So my rule is always the first 30 days is really to prove yourself and to the firm that you can hold on to that capital, right? In the first 30 days, if you're not able to handle that and you are not able to keep that funded account, you're not ready for prop trading. It's just the honest reality. If you can really keep that account for 30 days at least, then the rest will take care of itself, because that means you have the right habits in place to keep that capital and actually get paid consistently. The habits you build through all these evaluations are the wrong habits you need for the funded account. Two completely different shoes here. Day one of your funded account is do not trade. I know you got a funded account, you want to hit the market, you want to see green, you want to feel another win, and this time you want to have it as real money. And I would suggest do not trade at all. Actually read another time the prop firm's rules, because they have different rules on the funded stage than on evaluation. You don't want to be in a spot where you don't have read the rules properly and you maybe made a mistake, or you hold on to a trade too long, or you missed a rule which you breach, and then your funded account is gone, your whole work you put into the trash, and you don't want that. You really want to look at these 5 things. Number 1 is the drawdown. Is it static? Is it intraday? Is it end of day? When does the drawdown lock in, right? If you're coming from futures, you will have most likely a trailing drawdown. See if you mostly have static drawdown, depending if you have 2 steps or 3 steps or 1 step. So really there's so much offering right now, so many account types. You need to read the rules specifically for evaluations and for the funded account for the specific account you have purchased. Number 2 is the daily drawdown, right? You want to know what is your maximum you can hit. Some firms will have a hard breach. That means if you hit the daily loss limit, you will breach the whole funded account. Some accounts will have it as a soft breach. That means you just locked out for the day. And really look at these kind of differences, because that means really keeping the account or losing it. And I've seen so many people not reading the rules, fucking up their account, and starting at 0. Number 3 is the minimum trading days you need to have to get to a first payout. For the futures firm, there could be 5 minimum profitable trading days. For CFDs, mostly it's 14 days, and there's probably even some of them out there with 30 days, which we initially started in 4 years ago, 2022. So there's so many different types. Please look at it, how many minimum trading days you need to get and be eligible for that first payout. Number 4 is what counts as a minimum trading day. Some firm will have $100 to $200 fixed amount depending on your account size. Some firm will say 0.5% of your account size. So really look into that. What does qualify for a minimum profitable day so that you can get to that first payout as quickly as possible. Number 5 is the news trading rules, right? There are some firms will say you can't enter 5 minutes before and 5 minutes after a high impact news driver. Some firms will say 10 minutes, some are completely fine to trade the news. Really, these 5 things to really know what you need, what kind of rules you need to follow, and that is it in prop firm trading. In prop firm trading, it's really about following rules, and that is where most people fuck up because they can't be disciplined, they can't read through all of these rules and actually hold them. And that is one thing which cost me in the beginning quite some money, because I would test around a lot of different firms and then I would always expect, oh, that must be probably the same rule here than the other firm. So don't make this rookie mistake, always read the rules. These 5 things most important. If you want to be really sure, take a screenshot of their rules, right? Because firms are mostly also changing their rules, and you want to be sure that, hey, I've been purchasing on this day and I had these rules. You need to inform me before changing. Some prop firms will really search for things to make you breach, because that means they're not gonna pay you out that 5 to 10k payout. If you want to be really safe, you're going to have these screenshots saved up, and then you can go and trade safely. That was day 1. No real trading, just reaffirming yourself with the rules. I know it sounds boring, but that is where you really preserve capital and build it like a real business. So day 2 to 7 is where you actually can now start to trade. But what I usually do is I half risk or 1/3 of my normal sizing. Not just to make money, I'm not here to make money, I'm here to protect my capital and build a buffer above drawdown line. And here's what most traders do. They get to a funded account, they size up or normal size, they hit a normal losing day, and now they're like 2% in drawdown. They feel the pressure, they feel the need to fix it quickly and blow out within a day. That's not you, right? You want to make that more smarter. De-risk, go into it slowly, survive the first month in that account and build it up slowly, right? Next to it, you can still work on challenges to get more capital, but your funded account, that should be that prestige account you've really focused on not blowing and getting that small base hits layered up. So if your normal size is 1%, go to 0.5 or 0.25% just for the first couple of weeks. You don't want to be ending up end of the week at 5 or 10%. Your goal is maybe up 1 or 2%. If you can do it, you're already beating 70 to 80% of new funded traders. And that's where your edge is coming in, into that restriction, into the rule sets you have for yourself, your business model. And you want to be outpacing all the funded traders who are doing the same stupid stuff just to get that lottery ticket payout. You're gonna grind for it systematically as a professional. So in the second week from day 8 to 14, you can actually size up a little bit. Normally I go for 75% of my normal size, so I can, play my edge out and get the best out of it. But I'm not at 100% yet where I feel that pressure. I can still use that buffer to build more buffer and then slowly systematically raise the sizing so that all my edges will play out. And I don't feel the need of making money right now or chasing back losses. I have that small buffer, I'm not overly emotional, and can systematically grow that buffer into a real payout. Approach that protects you from having that first good week maybe to not size up to 100 or over 100% of your normal size, that you might feel overconfident now getting to a big payout, you systematically slowly getting it up. So if you have a normal losing day, it will not hit you so much and you don't have that big setback. Week number 2 is also there for hitting that minimum requirement of a funded account, meaning the minimum 5 trading days, for example, or the minimum profitable days you need to get eligible for a payout. You are in that buffer zone now, and you're working potentially on that consistency score, which then lead to be eligible for that payout. What you don't want to do is to have that one big day on your funded account, because that destroys that consistency rule and you get problems at it. So that's why that normal sizing up and also being very systematically on that approach. Some firms have 30% consistency rules, some 40, some 50. Really need to look at the funded account rules. That means if you want to make $5,000 on your funded account, your biggest day can't exceed 50%. So I'm not aiming for $3,000 gain on one single day. I'm just doing another boring $500 each day, so that the consistency rule is in check and I'm not really risking so much that, you know, I'm taking all my buffer away from it. So by the end of week 2, I want to have the minimum requirements met to be eligible for a payout. So the consistency rule is met, the minimum profitable trading days are met, the account is healthy, I didn't violate any rules. That's why the firm I trade is Blue Guardian, because they're being in the game for 5 years. They have paid out traders for $23 million. They have competitive offering in the market. I've been speaking to their team. They're building something very great. They have sponsorships to Eubank Junior Professional Boxer. They are sponsoring Birmingham City FC. They are just building a prop firm which is sustainable, and they are here for the long run. And that's what you can see. What I always say is that you're gonna go to every prop firm you're gonna trading with, and you check their Discord for the payouts, the actual people who are getting paid, look at their support team, are they there, are they responsive, and you're gonna check on their website if the CEO on their team is actually represented on their website. If it's not, it's most likely not a good firm and you'd want to stay away from them. Blue Guardian checks for me all the boxes. I made a long form video on that. If you want to check them out, down there in the description I will leave a link, and use code MAKLO at checkout to really get the best discount available. The great thing on Blue Guardian is if you're trading CFDs, for example, and you're requesting a payout, they have a promise that they're processing your payout within 24 hours. If they fail that, they will raise that profit split 100%. On the future side, because they offer both, you will receive the first 15k as a 100% profit split. That is the best in the industry, that goes beyond Top Step and all the future firms, and that's why they are the greatest in the industry. And in week 3 to 4 I usually request my first payout, and I really request, I'm not trying to scale that funded account to an enormous amount of profits, because I could have really a bad day or I spiral. I really want to lock in a good amount of money so that all the costs I incurred along the way, depending how many evaluations you needed, are covered. Right? You also need new cash flow into your business to buy new evaluations, which drive up your capital, and you're recycling the profit into more capital. That is the fastest way how you can really gain a lot of money in a month, by stacking up capital first, not focusing on the payouts so much, you know, every now and then gaining that payout with base hits, using it to recycle into new capital. There are usually 2 reasons why most traders don't take their payout fast. Here's number 1. They want to scale their account first. They think, oh, I can double my profits and I can actually gain a bigger payout. Everybody wants that, you know, $10,000, $20,000 payout certificate to then show on social media. But honestly, who cares? You know, who cares? It's for you, it's your business. You should keep it anyway secretly. You shouldn't invite social media for any expectations, any, you know, comments. It's just you versus you, right? It's your business, nobody cares, nobody should care, and you shouldn't make these payouts for external validation. The other reason why people take their payout fast is they don't trust actually the firm they're trading with. They're thinking they need to get the payout as quickly as possible because the firm is sketchy or whatever, but you only know when you request if you get the money. So, and you also need to do your research onto the firm, which is one of the most important things. You don't want to put your money on firms which you can't really trust and there's no proof of actually being a long, sustaining prop firm in the game. And this is why also choosing the prop firm is one of the most important things. The 30-day approach here will not work and fall apart if you're doing all the work, you're doing all, you know, your business model, you have your strategy in, you have yourself in check, and then you request a payout and you're not getting paid. Look, getting funded is the easy part, but staying funded is the hard part here and getting consistently paid out. So I hope with this framework it helped you to gain a little bit of understanding, use it as I outlined, and you're gonna stay funded and getting consistently paid. If you want more of these videos, then just drop a comment down below. I will read every message. Make sure you're gonna subscribe to my channel and follow me on Instagram at @maglotrades. I'm very active there, so you can also drop me there a DM if you need. And yeah, guys, I'm gonna see you in the next one. Peace out, good luck and good trading. Peace.